Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Friday, May 28th. Taking a quick look at futures. Equities are up across the board about 0.4. Oil's up 0.4 as well. Gold and silver are flat. Copper's down about 0.75%. As far as the macro front today is concerned, we've got that PCE number coming out at 8:30. That's going to be closely watched and is linked to inflation and that kind of thing. Chicago PMI, and then University of Michigan consumer sentiment at 10. So, and also, of course, we've got the 3-day Memorial Day weekend on top of this. So this will be the last trading day of May. And remember, I think the most important thing for today is just, how do we close in terms of getting a read on risk appetite and sentiment. There's only three choices, right? We go up, we just go into suspended animation mode for the rest of the day, not really wanting to gun it too much, just run out the clock essentially. Or, hey, let's take risk off into the holiday and we'll pick up the ball next week. Just having that sentiment read, I think will say a lot for where we're at. Now, what I want to do this morning is just take a quick look at bond yields, quick look at oil. We'll go through our indexes and FATMAAN names like we always do, and then I've got a couple of trade ideas for you at the end. So let's get into the bond yields. Yesterday, we had bond yields rising 4 bips, and we had presented this 10-year yield chart just the other day, and we have this nice rising channel, if you will. We had an excursion a couple months ago here where we hit 1.75% on the 10-year, and we've since dropped in back into the channel. And just technical analysis 101, once you leave a trading range and then you return to it, you find the bottom of the trading range, right? So that applies to channels as well. Top of the range, bottom of the range, top of the range, bottom of the, here it was very well contained. We went outside, and now we've come back and found the bottom of the range. So, and price respected that, right? It came right to the line that we had drawn, and now it went up. So the question now is, do we go to the top of the range? And the top of the range, at least the way I've got it drawn, is 1.95%. And that's pretty darn close to this 2% level that everybody's screaming about and talking about. But that could still take a lot of time. We could just, bounce around in here for a long time, and, maybe we're up here at the end of the summer. Or maybe we get more inflation information next week in June about May, and then, there's a fast move. So I think in this environment, you don't have to be a bond trader, but you certainly need to pay attention on bond yields at this juncture because the market's been so sensitive to it. And, since March, really. And with that rise in yields, we saw commodities explode yesterday. Everything went bananas as far as materials, commodities. Just everything went nuts. So if we start seeing that yield continue to drive higher, I think you're going to see commodities and the reopening and all that kind of stuff ignite. So keep an eye on yields. Also, I want you to keep an eye on oil. We mentioned yesterday that oil is 50% of the commodity index. And really you can see here that oil has been contained in this range between, let's just call it 58 and 60, 65, 50. And yesterday poked its head above. And so if that thing breaks out, I mean, truly breaks out, and I think we'll know it when we see it, I think you're going to see a giant candle, something like that. If there's some demand numbers that come out, or just on a technical basis, I mean, this is a big range. This is, I mean, let's just call it 59 to 65. That's $6. And so if you break out of a $6 trading range and you add that on to 65, you got 71. So that would certainly spark a lot of inflation fears, because you're going to see that immediately at the pump. And like I said, it's 50% of the commodity index. So that thing will go nuts, and that'll work its way, into consumer sentiment and that consumer inflation type behavior. So that'll be important to watch. And of course, you can play that directly in USO if you want, the ETF that tracks it, or you can go into energy equities. I think you would see a lift there on a breakout. So anyways, let's dive into the indexes. It's been very quiet the last couple of days. I think you can stay long against 418. We did have some fake breakouts here above 420 that ultimately failed. What happened yesterday? We had a gap up. We stood there most of the day, and then we came back at the afternoon and filled the morning gap. So the breakout did not hold. And now this morning, I took a look, and price was up here in the 421 range. So there again, we'll have that gap open below us, and that'll leave it vulnerable for coming back for a gap backfill on the on the gap open. They just fade it and bring it back. Now they can do that in one candle. We've seen that before, or they can take all day to do it like they did yesterday. So like always, just be aware of that. But if you've been swinging this, I think you can still stay long against 418. If you're actively trading, I think you can take it. If they backfill the gap right off the open, and then come back up and reclaim 420, I think you can get long 420 and see if they got any juice to push it up to 421.50. So you can play it that way. But the levels have stayed exactly the same as they have for the last few days. Same thing with the Qs. We had a push up to this 334, and it's been hovering there for a couple of days. Again, we're going to have if the morning action holds, we'll have a little gap below on the open. Do they come back and fill it up, or do they break out? I think this is a setup here where if you broke out above this resistance level at 334.25, you could get long and look for 336, something like that, if there's a push. Otherwise, I think here in the in the middle of the range is kind of like no man's land. And I think if you lost 332, like if there's an afternoon dump, or they start dumping it early, into the weekend, I think if you lost 332, you're going to get a quick move down to 330. I mean, there's nothing here. Look at the void in the volume over price profile. Not a lot of trading here, so I think you'll come down to 330. And then, like we've been discussing, if you lose 330, then you're testing this open gap here from the other day. IWM has been doing well. The reopening trade reaccelerated yesterday with yields rising. We had a gap up. What day was that? That was Wednesday. We had a gap and go, and then Thursday we had a gap and go. And this 225.50 was a real important level. Look at all the price reactions: rejection, 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 right on down the line, rejection, and now yesterday we broke out. And we held it. So IWM is positioned really, really well to go higher if it wants to. And I think as long as this 225.50 holds, you can look for higher prices in IWM. So the small caps have been doing really well lately. Now on the downside of that, you don't want to see 225.50 fail. Because, well, one, you're back in this big trading range. And number two, you're going to immediately come back to 224 to test this open gap and possibly fill it. So for today, I really think 225.50 is the bottom line. And, if we get a gap open, like I think, if the pre-market trading holds, if you get that gap open and it comes back to fill it back into 225.50, buy it right there. Buy it right there with a stop below and see if they take it right back up again. Of course, respect your stop if they don't, but IWM is strong, and I think the odds are that it stays strong, barring any kind of dump into the 3-day holiday that would screw up the whole idea. So IWM has been really strong, and I expect it to stay strong. Before we get into Fatman, I want to thank any new viewers to the channel. I really appreciate your time. I hope you're seeing value in having all these levels lined out for you. I think successful trading, at least technical trading, is driven off knowing the levels and then trusting them and then building your execution skills around those levels. So hopefully having this information at your fingertips before the day starts will give you the ability to craft a nice plan, and then it's up to you to stick to that plan and execute around it, and I think your trading will really improve. If that sounds appealing to you, hit the subscribe button and the like alarm, and then you'll get all my YouTube content. If you want to go over to the show notes, there's a place where a link to the blog and a link to register for all my content. That would be great. We'd love to have you. And also, longtime listeners and viewers, I really appreciate you sticking with me. And if you have the time, pass the link along to people in your trading circle, Facebook, Twitter. All that is really appreciated and will help build the channel. So, moving on to Facebook, really been the strongest of the FATMAAN names. We're at all-time highs. We had an impulsive move out of the gate yesterday. Came back to back test this 330 level that we had well defined. That was the prior high. And then a very strong closing candle that brought it right back up to 332. Stay long against 330. And if you're if we take out the highs, you got to buy, right? Remember that one. All-time highs, you got to buy. and then you can ratchet up all your stops to 332 and your strikes and see what they got in store for today, and then just keep your stop just below. Now, for those of you that are trying to do a longer term swing, if you were long this whole week, then you've got to roll your strikes out into time, right? If you've been playing weekly options, you're going to expire today. So remember, next week is also a short week. So if you're a committed bull to Facebook, you might want to go out 2 weeks, or just close it out. You've got a huge win on your books. Close it out and pick it up on Tuesday, right? Not worry about any weekend risk. You can do that as well. See what you got. See what they have in store for today, and then close out your position Friday afternoon. Enjoy the holiday, and then pick it up on Tuesday. If Facebook keeps going, you're not going to miss a thing. And if they pull the rug, then you'll just buy it at lower prices, right? So maybe that's a little strategy for you today. And remember, while it's on my mind, if you've been playing with weekly options, make sure you check all your positions today, because they do expire, and you don't want to have that rude awakening tomorrow morning when you find out you've been assigned all these shares that you didn't want. Make sure you clean that stuff up today. And also, Lotto Friday. You get a Facebook or an Amazon, or any name really. If you catch a runner, if you get an option that's expiring today and you get a big move in your stock, you can get paid really well on that. Just remember, they call it a lotto for a reason. Most lottery tickets expire worthless. So don't play with anything more than you're happy to lose, is what I like to say. So Apple has been a dog. To be honest, downtrend, made this little move. Along with the, FANG has been relatively strong here, but not Apple. We said 128 was really important on the daily chart, and it did not like 128 at all. Came back and then just fell apart into the close yesterday. So, not a lot going on Apple. If you faded this yesterday, great. You made a couple bucks. Nothing wrong with that. But now with price down here and a gap below, if they fill that gap and lose 124.75, then, probably coming down here to 122.5 to test this prior low. So Apple is still caught in a downtrend, and if we fall much lower, back below this trend line, all this will definitely look fake, because anybody that bought this breakout and was in here, for all intents and purposes, they know they were wrong. So there may be a lot of frustrated Apple bulls out there that may be at the point of throwing in the towel. And of course, when you throw in the towel, prices go lower, right? Till it finds that level of support where people are ready to step back in. So this has been disappointing price action on Apple. Contrast that with Tesla, right? Another nice day, up almost 2%. We've had all these levels lined out perfectly. Consolidation range, breakout, back test, a chance for anybody that missed this move coming back to back test the breakout would have been a great entry point. Quick move up to 625, spent some time consolidating, and then a huge closing candle yesterday. I don't know what was up with that, but we saw that on a number of stocks yesterday. So now you can move everything up to 625 and look for 640, and then a move to the top of the down channel at 650. So those are your two intermediate targets, 640, then 650, and then any break above 650 will be targeting this 670 pivot point that we had been focused on for weeks and weeks and weeks back in the chart. So that would be a big level to recapture as well. So, you know, Tesla's been looking a lot better lately, and you know, we've had these levels lined out pretty well. So it'll be interesting today whether they can hold this 625 into the holiday, and then see if they build on this big candle today and push towards 640 and possibly even 650. Moving on to Microsoft, junky day, down about 1%. Had this big impulsive move, did not have the power to get through 252, and then it fell away. Your first support is going to be down here at 249. There'll be an opportunity for a bounce there. But if things are soggy or they sell off into the weekend, you're going to be coming down here to 247.50. And then you've got a big gap all the way back down to 245, which was the key breakout level on the daily chart. Got to hold that. Got to hold 245 if you're a bull. And so, yeah, if they bounce it here at 249, then your target is back up to 252. So all these levels are in play for today. Amazon did nothing all day, and then had a closing. You know, the biggest candle of the day was a bearish candle into the close. So right here in the middle of the range, nothing to do. I think you got to wait to recapture 32.50. I think that's your pivot. We've made a note in the prior days that this is a really important level on the daily chart. You've got a convergence of all the moving averages, and you know, this rejection here, I mean, that's a comment on the bulls not having the power to take it out. So if they can, you know, if they can push up to 3,300 and hold it, then you're going to have a great long entry on Amazon, you know, against all those moving averages. But as it stands now, it just hasn't had the power to take out that level convincingly. These other excursions have ultimately resulted in fake moves, because we came back, then down here, you know, breakout up here, rejected. Now we're coming back into this trading range again. So, I mean, there's been some you know, sizable head fakes on Amazon lately. Google. We had talked about this 2390 as being resistance, could not power through, and then a bearish candle into the close. We're in here in the middle of this range. I think if you retake this 2375, you can get long, or you can get long if it comes down here to 2350. I think that's your lower level there. I think it would be worth trying to take a long with a stop just below, because if 2350 doesn't hold, then 2330 will come into focus pretty quickly. And just like the commentary on all the other names, I think how traders approach the weekend will make all the difference. if everybody says, you know what, let's get out of everything, we don't want to hold risk through the weekend, you may see that pullback. But if they say, you know what, we'll just run out the clock or we'll take it up a little bit, then buying 2350 will likely prove to be a good entry point if you want to hold over the weekend. So anyways, focus on 2375 and 2350. Netflix, nothing to talk about here except it continues to hold 500, which is constructive. But I will say it's losing the bull flag look. Usually on a bull flag, you want to see, you get the impulsive move. You want to see a little bit of a consolidation and then a move higher. This consolidation is getting a little bit long in the tooth. I mean, it's losing that bull flag look. So that doesn't mean it's bearish. That just means it's taking its sweet time, and it doesn't look the way I like to see bull flags look. And so it's just getting a little bit extended. But as far as the other technicals go, as long as it holds 500, the chart's constructive. Look for 507, 515, and then if it breaks above 515, you got a $35 gap above that needs to be filled. Semiconductors stayed strong yesterday. I think the range here at 247.50-ish, the gap and this support level at 244 are the keys. If you break into 247.50, you've got a $2.50 to $3 gap to fill, and then if you lose 244, your line in the sand for bulls is 242.50. So all in all, semis have been strong for the past week. So those are your key levels, basically staying the same from yesterday. Stay long against 244. If you want to add or establish a new position, you can do so at 247.50, moving into the gap. So let's wrap up with a couple trade ideas, chart setups, if you will. This is CCJ. That's Cameco. They are one of the biggest uranium producers. You can see nice bull trend. And here's that bull flag look that I was just talking about. Impulsive move higher, little consolidation, and now an emerging breakout. Here's the measured move. You take the length of the flagpole, you extend it to the flag, and so the measured move target is 2350. Notice RSI and the bullish regime, and it's been in that regime for a long time. And so too on the momentum here, well above zero, and putting in what looks to be a bull cross. So I like Cameco hitting it right here at 2050, setting a stop just below. I mean, you can set it at the 8-day at 1971, or any place along here that fits your risk tolerance. But you got an emerging breakout with a bull flag. And, as far as the fundamentals go, uranium, like a lot of other commodities, there has been no investment in finding uranium. It kind of is what it is. And with the decarbonization effort, people are realizing we can't run the world on wind and solar. It's not happening. That'll never happen. And the fact is that nuclear is carbon free. I mean, it's that base load power that we need to, power all these EV plug-ins. If everybody had EV cars right now and they all plugged it in after work, the infrastructure would totally melt down. I mean, it's just not possible. There's not enough electricity to handle that load. So if we're all going electric, there's going to have to be some major investment in nuclear. And of course, that's going to take years. You don't build a nuclear plant, in 18 months. But that optimism or that realization is flooding into uranium natural resource stocks. And if you go back in time, this move is just getting started if in fact uranium continues to catch a bid. So anyways, I like the setup there. Another basic materials play is this Lithium Americas. Really fast ramp up, unsustainable, very steep, and then a big 50% sell off. If you put your Fibonacci's on 9 where the move started and bring it up here, you'll see that this 12 was a 50% pullback. And so technically, we've taken out the downtrend line. We've recaptured all the EMAs, the 200, the 50, the 20, and the 8. So prices above everything, taking out the downtrend line. RSI is breaking above 50. We've got a bull cross on momentum, trying to move up here above 0. I like the setup. You can set your stop like at 14, and then I would look out to at least July. I would target the July 15 calls, and then my first target here is 16, but then there's a big void above 16 that would allow price to find 19. So first target relatively modest at 16, but then breaking into that void for a move to 19, and that would be a really nice move. So those are my 2 trade ideas for today. Of course, if you have made the decision, you know what, I don't want to add risk. These positions will be, available Tuesday morning. So don't think, oh my God, now I gotta get it today. That's not the case. You can pick up the ball on Tuesday if that's your strategy and that's what you want to do. But I do like the technical setups. So wrapping up here, I hope you guys have a nice Memorial Day weekend. Find a way to sharpen the saw, spend some time with your family, get outside the charts, come back fresh on Tuesday, and we'll hit it. I think the most important thing for today is, how does the market approach the weekend? Risk off, risk on, or just run out the clock. So let's wrap it up there. This has been Chris Buss with Traders Profit Compass. Talk to you next time.